Hi, and welcome to Invest St. Louis with stlouisrealestate.co. I am Lynn Hart, and I am brokered at Real Broker LLC here in St. Louis. And this channel is about all things investing, especially multifamily residential property, and things related to that for real estate agents, new or experienced. So today's topic is kind of the number one question I get. Doesn't always come across like this, but it's where do I start? Right? A lot of people call me before, just because they've been thinking about real estate investing for a while, and they know that I do some of that. I'm an investor myself and a real estate agent to many investors. So um, here's how I answer the question, where do I start? Or when I get that question. Um, it depends a little bit on you, and it depends on what situation you're actually in. So, um, the first questions I'll ask somebody who's kind of approaching me like this is, well, tell me about your current situation. Are you a renter? Are you already a homeowner? Do you have savings? Have you gone to look at loans to get pre-approved and see what different kinds of loan types might work for you? Um, could be a variety of things depending on what stage you are in. So if you're a renter, I would say the first thing you need to do is to figure out how you can not be a renter. And instead of putting that money in your landlord's pocket, find a way to have somebody put money in your pocket. And by that I mean, if you can, get approved for a loan and go buy a multifamily residential property of your own. It could be a 2 unit, it could be 3 or 4, and you can get that on a regular loan just like you would get to buy your own home, as long as there's not more than 4 units. So the first step there, the first step is, where are you financially, right? Do you know that you have a lot of credit card debt, student loan debt? Um, if you do, it's still probably worthy to talk to a lender to just see if you would be able to qualify for a loan. And if not, they can give you some goals about how to kind of start focusing on your own finances so that you can be ready in the near future. So, one way to do that, let's say that you are somebody who is a renter and you're not yet at a place where you are able to um, get a loan and start buying, then the advice that I would have, and I wish I would have done this earlier in my life. It took me an embarrassing amount of time to get that all figured out. But I would start living well below my means. So if the apartment that I'm living in is really attractive in this super cool neighborhood and I'm paying a sky high rent, even with a roommate, I would look to maybe make a move and see how much money I could save if I lived at or below my means. And and I would also take a look at some other things, like, are you doing a lot of credit card spending? If you are, stop it and start figuring out how you can get some of that paid off. If you talk to loan officers or credit repair people, you're going to want to have your basic amount of credit to be somewhere 20 or 30% of your total credit limit. Um, so that will help get your credit score up, right? You don't have to have all the fancy clothes and shoes. You need to um, start focusing on making a choice that is going to make you wealthy versus buying things that take away from your wealth, right? So you're giving your money away for things, or could you reconsider how you're living for a year or 2 years to turn your financial situation in a different direction, prepare and buy your first property? So that is my general advice for people who are not yet property owners and are ready to get into property ownership. One, get yourself ready. Maybe you're already ready. If you're ready, you still need to have that conversation with a loan officer and get yourself a pre-approval. In St. Louis, the market is still a seller's market. It is, this is being recorded in September of 2022. Things have balanced out quite a bit, but it is still a seller's market. When things are new to market, we're still seeing of the potential of multiple offers. They're not to the extreme that they were, a year ago. They were really, really kind of ridiculous, right? But so now things are a little bit better in that forefront, and some properties are starting to sit on the market a little bit longer, sell closer to asking, sometimes lower than asking, but we're not there yet. So if you're thinking that things have changed that much, they've not really changed that much. There's a little less competition. So be prepared for that and get shopping, right? We'll have another video on how to evaluate property so that you kind of know how much cash flow you should expect and how to do that. But the first thing is to know your loan, to know what kind of a loan term you're going to have and what kind of potential interest rate and so forth, and what kind of down payment in case you don't have it. Do you need closing costs? Do you have enough saved up for that? A loan officer will help you figure all of that out. So if you're able to own or occupy, you can get into one of these buildings, 2, 3, or 4 units, for a very low down payment if you don't have another owner occupy loan. If you do, then you're looking at least currently 15% down on a 2-family or 25% down on a 4-family. Those things have ebbed and flowed throughout COVID. They used to be you could pay 5% down on a multifamily on a conventional loan, but those days are not currently one that we can take an advantage of. So talk to your loan officer about all the ins and outs of financing your purchase property, the property you're going to purchase. And start thinking about the neighborhoods that you want to live in. So, I can most easily talk about St. Louis, and once you know kind of how much money you are going to have to spend and what you think the maximum monthly payment is that you want, then it's easy for us to go look at property and decide what's going to work for you. And figure out how much money, are your rents just going to pay for your mortgage, which is still a big win, right? Meaning you don't have a rent payment anymore because your tenants are paying your mortgage, even if you don't have cash flow. It's a little difficult to get cash flow on an owner-occupied home with a loan. Not that it's impossible, but it's not as close, right? If you can get more units, you have a better chance of having a little bit of cash flow. But if you're going to be living in one of those units, essentially not receiving rent for that unit, then you might expect that you're going to break even or have a low cash flow. In any case, you are moving forward from putting money in your landlord's pockets because now people are putting money in your pocket. If you are single and able to do so, you could even buy units that have 2 bedrooms and choose to rent out one of your bedrooms to a roommate if that, suits your lifestyle. So there are a lot of different creative ways that you can find to make money with multifamily property, and we'll go into those on another video. But I hope that this gives you an idea of where to start. And a little bit, we've been talking to people who don't have any money or are low on cash funds. If you are, there are plenty of people that are in St. Louis that just haven't bought a building yet that have all kinds of funds, different levels of funds that they could use to start. If you have that, then you have a lot more freedom and you can get started. You still need to go to a loan officer and know what your loan's going to look like so that we can manage where you want to spend and how you want to buy to maximize the cash flow or the return on your investment. If you are not going to want to live in one of your units, then you should plan to put 25% down. So that would be an investor targeted loan. But also if you have a decent amount of funds, you could even go straight to larger apartment buildings, 5 and above. Depending on the amount of down payment, you're still with a commercial loan, you're going to look at maybe 20% down, or in some, depending on the bank, if you're living in St. Louis, maybe 15% down on a 5+ multifamily that has using a commercial loan. Again, those things can all change. As of this writing, I think I know one bank that still makes a 15% loan to locals, but that could change at any time. But so if you are well funded with cash or liquid funds in one way or another, you could go right to a larger building. Um, so I hope that you found some of this information. I know it's a little bit basic, but there are people that have these questions. So if it's too basic for you, I hope you click on to another video. If it was good for you, I hope that you found something useful. I'd love to have your questions in the comments. And I do promise to respond to each and every one of you that writes. If you subscribe, even write me a comment that you subscribed, or what you liked about this video or the other videos that I have on this channel. Maybe some videos that you'd like to see, or a topic that you have a question about. I will probably reach out and try to have a personal conversation with you, either on a video call or otherwise, just because I like to know other people, other investors, whether you're a new investor or a seasoned investor. There's something that I can learn from everybody, and if I can give value to you in any way, that's what I'm here for. So again, my name is Lynn Hart. I'm with Invest St. Louis and St. Louis Real Estate Company, brokered at Real Broker LLC, and I look forward to getting to interact with you. Have a great day.